Hey everyone, welcome back to our channel. Today's topic. Buckle up, massive US economic events could shake crypto markets this week. Buckle up. Because this week, the crypto market is entering a danger zone. A rare combination of US politics, Federal Reserve moves, global interest rates, and critical economic data is lining up at the same time, and when this happens, markets don't move slowly. They explode. For Bitcoin, Ethereum, and altcoins, this could mean sudden pumps, violent crashes, or extreme whipsaws that wipe out emotional traders. This is not a normal week. And if you're holding crypto, or thinking about trading, you need to understand what's coming. Today, we're breaking down why crypto hates uncertainty, the U.S.EU trade war pressure, the Fed's liquidity injection, key economic data releases, Japan's rate hike threat, and what Bitcoin's chart is warning us about. Let's break it down calmly, before the market loses its mind. Why crypto hates uncertainty. Crypto loves clarity. Clear rules. Clear trends. Clear liquidity. But when too many major events collide, fear takes over. Investors don't ask, how high can Bitcoin go? They ask, how do I protect my money? And when fear rises, risky assets get sold. Cash becomes king. Bitcoin gets treated like a speculative asset. History proves this. During previous trade wars and macro shocks, Bitcoin has dropped 20 to 30% in a matter of days, not because crypto failed, but because uncertainty scared investors. And this week is full of uncertainty. U.S.EU trade war pressure is back. Let's start with politics. President Trump has announced 10% tariffs on European Union goods, reigniting trade tensions between the US and Europe. Trade wars do one thing very well, right pointing backhand index, they scare markets. Here's how it flows. European stocks fall. Global risk sentiment weakens. Crypto feels the pressure. When trade wars heat up, investors sell Bitcoin. They move money into US dollars, bonds, or gold. Altcoins suffer even more. This isn't about crypto fundamentals. It's about global fear. The emergency powers question. The biggest unknown right now is this. Can the US president legally use emergency powers, i.e. EPA, to enforce these tariffs? A court decision on this could change everything. Two possible outcomes. Scenario 1, Trump wins. Executive power strengthens. Markets price in more aggressive policies. Risk assets stay under pressure. Scenario 2, Trump loses. Markets breathe a little. Political uncertainty drops. Short-term relief rally possible. Either way, uncertainty remains high, and crypto doesn't like that. Fed's Monday liquidity boost, hope or trap. Now let's talk about the Federal Reserve. At the start of the week, the Fed plans to inject $15 to $20 billion in liquidity into the banking system. On paper, this sounds bullish. More money in the system usually means more risk-taking, more capital flowing into Bitcoin, higher asset prices. But there's a catch. The holiday problem, low liquidity. US stock markets are closed due to a holiday. That means lower trading volume, thinner order books, higher volatility. In low liquidity environments, one big sell order can crash prices. One big buy can pump the market unnaturally. So while liquidity injection is bullish long-term, short-term price action could be wild. Low volume plus big news equals chaos. Midweek Fed signals, words that move billions. As the week progresses, attention shifts to two key Federal Reserve speeches. Traders will listen carefully for clues about inflation control, interest rate cuts, future liquidity injections. Crypto reacts instantly to Fed language. Hawkish tone, tough on inflation. Higher rates for longer. Less risk appetite. Bitcoin struggles. Dovish tone, soft language. Rate cuts expected. More liquidity. Bitcoin pumps. We've seen this before. In 2025, a single dovish Fed speech sent Bitcoin up 10% overnight. Words matter more than actions. Economic data bombs, the real market movers. This week isn't just politics and the Fed. We're also getting major US economic data. Let's break down why each one matters for crypto. Inflation report. Hot inflation equals rate hikes stay. Risk assets sell off. Bitcoin drops. Jobs data. Weak jobs equals economic slowdown. Investors go risk off. Crypto loses momentum. GDP figures. Slowing growth hurts altcoins first. Bitcoin holds better, but still pressured. Bad data sends money into bonds. Good data gives hope, but uncertainty still rules. Japan's rate hike threat, the global shock. Friday could be the most dangerous day. Japan is considering a rate hike. Why does this matter? Because Japan has been one of the last low-rate economies in the world. If Japan raises rates, global bond yields rise. The US dollar strengthens. Bitcoin loses its appeal as a hedge. We've seen this movie before. In 2022, global rate hikes crushed crypto. Bitcoin fell from $69,000 to $16,000. Markets have long memories. Bitcoin's technical setup, warning signs. Now let's look at the chart. Bitcoin is hovering near a key resistance level around $95,000. To break higher, it needs positive macro news, strong volume, clear risk-on sentiment. Right now, the signals are mixed. Technical red flags. RSI shows overbought conditions. Volume is low. Easy to push price down. If macro news turns negative, $80,000 becomes a key support zone. Altcoins usually follow Bitcoin, but fall harder during fear. What happens next? Expect violence. When events cluster like this, markets don't move smoothly. Expect early week dips from thin trading. Midweek reversals based on Fed language. Friday chaos from data and Japan. The volatility index, VIX, is rising. Crypto's fear indicators are rising too. Short-term pain is possible. But here's the important part. This is not the end of crypto. Volatility does not mean failure. It means transition. Markets move from confusion clarity, fear opportunity. Once uncertainty clears, capital returns. Bitcoin stabilizes. Long-term trends resume. Smart money waits. Emotional money panics. What should you do as a viewer? This is not financial advice. But historically, overtrading during volatility destroys accounts. Emotional decisions lead to losses. Patience rewards survivors. Sometimes the best move is white right pointing backhand index doing nothing. Let the storm pass. Final thoughts, strong ending. This week is not about price targets. It's about survival and discipline. Crypto is entering a stress test, not because it's weak, but because the world is uncertain. If you understand what's happening, you panic less. You trade smarter. You protect your capital. And that alone puts you ahead of most people. Stay calm. Stay informed. And respect volatility. That's it for this video. We'll meet again in the next one.